Widely expected that rates will be cut for a second time this year by 0.25%, and that would take the official borrowing rate down to 3.85%. We have our business team on hand for the decision. David Taylor joins us with his analysis from close by to the Reserve Bank in Sydney, and Alicia Barry is in the studio with me. Alicia, good to see you. So let's start with what we're expecting today. There's no chance that they won't cut, is there?
Well, not according to the market or economists who have been surveyed by various financial data collection agencies. I mean, look, the last decision we saw came ahead of Donald Trump's tariff chaos, which he unleashed on the global economy. This is the first meeting that the RBA will have a chance to really react to that and help insulate Australia's economy from the global fallout. If you look at financial market predictions, last time I checked, 99.1% bet for a 25% basis point cut and a 0.9% chance that there could be a 50 basis point cut. So nowhere in that sort of, probability outlook is there the chance of, according to financial markets, rates being on hold. And if you look at economists surveyed, 42 of the 43 surveyed by Refinitiv think there'll be a 25 basis point cut. One, NAB, thinks there'll be a 50 basis point cut. So in any case, any way you look at it, there certainly looks like there's going to be a rate cut, taking the cash rate below 4% for the first time in 2 years. We haven't seen a cash rate with a 3 in front of it since May 2023.
So the last rate cut was in February this year. That was the first one for a long time, wasn't it? And was that mainly because the inflation rate was coming down to more manageable levels?
Yeah, and the Reserve Bank had almost sort of set itself up for a rate cut at that meeting to kind of, I guess, take the edge off what have been really restrictive interest rates in this country. The economy could sort of handle that, and they were expecting that inflation would come back down into the target band, which it has done so now. We've got the headline inflation rate at 2.4%, and for the first time in quite a long time, over 2 years, I believe, the underlying inflation rate is sitting at 2.9%, so it's back within that target band. That gives the RBA more scope to cut interest rates again. It wasn't really keen to do so with a follow-up in April until it had that quarterly inflation reading that showed those numbers did really cement that the underlying inflation rate was heading in the right direction.
Okay, let's go to our business correspondent, David Taylor, now down by the Reserve. So as Alicia was saying, David, a cut is expected. It's the inflation rate, of course, that the Reserve Bank will be most focused on. But as Alicia was saying, it's that international situation, particularly Donald Trump and his tariffs, that's really important as well, isn't it?
That's right, Roz, and I lost half of your question then, unfortunately. But look, the international situation will be front and centre for the Reserve Bank's mind. I mean, the other point to make is that the Reserve Bank has been very reluctant to even mention Donald Trump's name. But of course, he's right front and centre in terms of the uncertainty that's been plaguing global economics and global trade. Indeed, the last statement we had from the Reserve Bank, they used the word uncertainty several times. And that's kind of the problem we find ourselves in. And it also wraps up, really, the entire, I think, conundrum for the Reserve Bank in the sense that, as Alicia quite rightly pointed out, you've got headline inflation at 2.4%. And you've got core inflation at 2.9%. And core inflation strips out all the volatile and bumpy items in the basket of goods and services measured by the ABS. Now, the Reserve Bank has always said that it wants inflation to be between 2 and 3%. So everyone sitting at home or watching this coverage wherever they are might think, well, job done, right? Well, not quite so fast, because with the uncertainty created by Donald Trump's tariffs and, of course, with a tight labour market, tight jobs market here in Australia, there's always the option that things could go very pear-shaped, which would obviously lead to much lower prices here in Australia in terms of a trade war and a recession that might follow from that. But also, if the jobs market improves from here, if businesses ignore all of the uncertainty and focus on hiring and doing well and boosting profitability, well, of course, more workers have money in their pockets and can spend up. So that potentially pushes the inflation rate back outside the Reserve Bank's target band. So, Ros, the main point here is the Reserve Bank has said they want inflation to sustainably be within that target band. And both of those other risks I mentioned can possibly push inflation outside of that target band. So today we'll be looking for where the Reserve Bank thinks that inflation will ultimately arrest.
And Ros, I have
global
the
factors
decision.
and the jobs market will influence that.
Ros, we have the decision. The Reserve Bank has cut interest rates as expected by 25 basis points, taking the cash rate down from 4.1% to 3.85%. This is the second cut in this current cutting cycle, following up from the rate cut in February. Now, if we take a look at what that will mean for mortgage borrowers, you can see that 25 basis point rate cut takes the cash rate down to 3.85%. Of course, we had been sitting at an interest rate high, if you like, of 4.35% ahead of these last two interest rate cuts. This was widely expected. The market had a 99% chance of this priced in. 42 out of 43 economists thought that this would be the outcome. It's really come as no surprise, but probably quite welcome relief for mortgage borrowers. We do have a graphic actually that could show you just how much money you would save if you had a $750,000 mortgage, or in fact, I'll just tell you, based over a 25-year horizon, you would save around $114 per month on that. But of course, when you have a mortgage, you obviously do benefit from an interest rate cut. If you're saving money, it's very likely that the bank will hurriedly pass on that interest rate cut to your savings account, and you will actually be at a disadvantage there. So it sort of cuts both ways, these interest rate decreases, but certainly welcome news for mortgage borrowers. The cash rate coming down from 4.1% to 3.85%. Joining me now is Chief Economist at EY Oceania, Sherelle Murphy. She is in our Canberra studio. Sherelle, no surprises in this move. Does the economy need it, do you think, or is the RBA just trying to get ahead of global developments?
No surprises at all, as you say. I think the economy certainly can justify this, because remember that at 4.1%, the interest rate is actually restricting the economy, and we've got certain parts that are quite soft, so consumption, for example. So we will see from this, I guess, a little bit of an easing up in conditions for households. And of course, on the horizon, potentially there are more risks given what's going on in the global trade environment. So I think when you put those two things together, plus the fact, of course, that inflation has come back down into the target band, both on headline and underlying terms, it certainly does justify this move from the Reserve Bank.
And of course, it is welcomed by home borrowers, but not by savers.
No, that's right. There's, as always with the Reserve Bank's moves, there's some who enjoy it and some who don't. So for those with a mortgage, obviously great news. But if you're relying on savings, then this potentially does take your interest rate down a little bit, and that's clearly a negative for them.
Now, of course, the labour market, as David Taylor was mentioning just a bit earlier, is quite tight. The unemployment rate's still at 4.1%. What's the risk here that that could spark inflation again?
Certainly when we've got a tight labour market, particularly when it's combined with low productivity growth, you can actually see upside risk to inflation. And this has been on the Reserve Bank's mind for a while, and something that it constantly reminds us of as an upside risk. But we have to say that so far it's not pushing through into inflation. Wages growth is fairly tempered. We've got the wage price index sitting below 3.5% at the moment, which is a fairly low rate, and certainly not inconsistent with its inflation target. Again, the Reserve Bank does tend to be more concerned about that forward view, and so if that strength in the labour market combined with the low productivity growth did actually push up unit labour costs for employers, then the story would be different. But we just haven't seen any evidence of that yet, and I think the Reserve Bank's concerns about that are maybe a little less poignant than they were recently.
I mean, uncertainty is the word of, I guess, this quarter, and the RBA has said in their statement the outlook remains uncertain. Going into this decision, the market was pricing in around 77 basis points of cuts. That's about 3 for this year. How many more interest rate cuts do you see coming?
I think the Reserve Bank potentially has another 2 in it this year, but again, it depends, of course, on how things eventuate. And as we've seen over the last 3 months with the Trump administration, that is very hard to predict. Now, of course, the Reserve Bank makes these decisions month to month. It has no predetermined path for interest rates. But certainly, if we see things calm down, if we see the inflation rate continue to remain in the Reserve Bank's target band, and if we see the economy just putter along at these kind of 2 to 3% rates of growth, then I think it can definitely take a little bit more out of the cash rate to make conditions just that little easier for consumers to potentially lift growth without threatening inflation.
And the RBA statement actually accompanying this it begins on inflation, so that does seem to be a major concern for the RBA. What do you think it's going to be looking for from here?
Well, as we move towards the next meeting, which is not actually until the beginning of July, the Reserve Bank, of course, is going to be looking to see what impact its interest rate cuts to date have had on the economy. It's going to be looking at the labour market very tightly. By July, it won't have the next instalment of the quarterly CPI, so that's not going to probably influence it too much. But of course, the global trading environment, that's really key to what's going on at the moment, not just because of course, of its impact on exports, but because of its indirect impact on the economy through the nervousness that it's clearly creating in the business environment, and potentially for consumers as well, who may put off some large purchases just till they see things settle down. But, a big combination of factors at the moment, very much global in nature. At the first instance, I think the Reserve Bank's got a lot to think about.
Absolutely. And just a final one, Cheryl Murphy, of course, interest rate cuts are welcome by home borrowers. As you say, the economy could probably do with a little bit more stimulation. What do you make of the economic picture in Australia at the moment?
Look, we've got an economy which is doing okay, not great. Economic growth is soft. It's below potentially where it could be. However, a lot of that is not due to a lack of demand. It's just because the supply side of the economy has been somewhat lacking recently. So we still got a strong labour market that's to be welcomed. Of course, that's a really important driver of growth. But to see a slightly stronger consumer, I think, would be very welcome. Through the first quarter of this year, the consumer was still acting quite conservatively. That discretionary spending was low. So I think the Reserve Bank would be fine with a bit of a pickup there, again, as long as it's not threatening inflation, and we really don't have a lot of evidence that that's the case.
Cheryl Murphy, thank you so much for your insights.
Pleasure.
So, Ros, we got the 25 basis points that most expected, not the big 50 basis points or half a percentage point that some were hoping for on the edges there. But of course, the Reserve Bank now saying that it's going to be watching the global economy and the outlook for inflation and the labour market here in Australia as we wait till the July meeting.
OK, well, let's go back to David Taylor, who's outside the Reserve Bank. David, you've had a chance to really have a good look at that statement that always comes out with the Reserve Bank decision. What are the takeaway points for you?
Oh, Ros, not
David, can you hear us?
You have to say that one again, I'm sorry.
What were the takeaway points from the Reserve Bank statement that came out when it announced this decision? What stood out for you?
Yeah, Ros, the odds of the audio cutting out as soon as you ask me the question are not lost on me. Look, I think that the statement will come as a very welcome surprise for millions of mortgage borrowers, because not only have we got a quarter of a percentage point cut to the cash rate at 3.85%, which will put a standard variable rate, perhaps a typical standard variable rate, under 6%. So we're looking at sort of 5.5% for mortgage borrowers, which would be a terribly big relief, especially you consider that you got the February rate cut and this rate cut. You're looking at, for a $700,000 mortgage, 25-year term, you're looking at potentially, $150 more or plus savings per month. So that'll be very welcome. But what makes it extra special for that cohort is that the Reserve Bank is saying that it thinks that inflation will stay between 2 and 3%. And that's crucial to referring to what I was talking about before we got the decision. And part of the reason for that is that it looks like the Reserve Bank isn't that concerned that the relatively tight jobs market will push inflation up. Of course, people have more money in their pockets and they go out and spend. The Reserve Bank doesn't seem too concerned about that anymore. So the ultimate goal is for inflation over time to be sustainably between 2 and 3%. And what this statement indicates is, notwithstanding some uncertainty, which is to be expected, that inflation is expected to be consistently between 2 and 3%. But Ros, here's the kicker. In the second last paragraph, the Reserve Bank says it's on the outlook for a, quote, severe downside. Now, that's a direct, reference to what Donald Trump is doing in terms of the global economy. So what we saw on the 7th of April was share markets, if you like, crashing across the globe after Liberation Day, because there was this great expectation that over-the-top tariffs would really hurt the American economy. That would flow through to China and, of course, hurt Australia. So what the Reserve Bank is saying is it's not ruling out the possibility that Australia will be hit, sideswiped by unexpected American economic policy, or indeed that Japan or China will be caught up in that too, because they're Australia's largest trading partners. So whilst, the Reserve Bank is comfortable where it is at the moment, there is the potential for further economic downside, and that's why there's the potential for a number of interest rate cuts before the end of the year.
Okay, David, sadly, I think we're going to have to leave it there because the audio is an issue. If you can hear me, I hope you can, but I hope you understand. And Alicia, let's take a look at the markets now. This was widely expected. Have they already factored in this the rate cut that we
it hasn't. Yes, it hasn't come as a surprise at all. So we have seen the dollar come off a little bit. It's fallen just from about 64.5 to 64.2 US cents. As for the markets, let's have a look at that now. It has. I did have it up for you. It's pretty stable. Yeah, the market is up about 0.5% where it was leading into this decision, maybe up just a slight amount more. I mean, the outlook now is going to turn to, Ros, whether or not the big banks start to pass on these rate cuts to their mortgage customers in full. I believe we've just had word that National Australia Bank is going to do just that. And we'll be watching the other banks closely. And then it will turn to the outlook for the next meetings. As Sherelle Murphy said, the next meeting's not until July. And if I bring up those interest rate expectations, very early days based on traders reading this statement, it's showing that there's about a 35% or so chance of a cut priced in at the July meeting. Of course, we're well over 8 weeks away from that. We will certainly probably see that change. But in any case, the market not too fussed about this decision because it was widely expected, but we'll be watching those banks very closely.
OK, we'll leave it there. Alicia, in the studio with me and David Taylor down at the Reserve Bank. Thank you both. Well, let's stay with us. Do stay with us. RBA Governor Michelle Bullock is due to give her usual post-meeting press conference. That's at 3:30 Australian Eastern Time. We'll bring that to you live here on the ABC News Channel, and the Treasurer, Jim Chalmers, is expected to speak any time now. In fact, I believe he has got to his feet. No, he is about to speak. We'll, of course, take you there and hear his comments after this interest rate cut of 25 basis points, widely expected by the markets. Now let's get more on the other major stories of the day. The flooding situation in New South Wales being a big one. Digby Raywood is Mayor of Dungog Shire Council. He says the recent rainfall has made an already bad situation much worse. We'll bring you that shortly. Let's go to the Treasurer.
Okay, everyone good to go? Okay. Well, today the Independent Monetary Policy Board of the Reserve Bank decided to lower the cash rate once again. This is the second interest rate cut in the last 3 months. This is very welcome relief for millions of Australians. We are really pleased to see more help is on the way for working families with a mortgage, and that's what this decision today is all about. It does reflect the very substantial and sustained progress that we've made together on inflation in our economy, and it also recognises the uncertain global environment as well. When it comes to inflation, both headline inflation and underlying inflation are now both in the Reserve Bank's target band for the first time in almost 4 years. And this is the first time since records began that we've got the unemployment rate in the low fours at the same time as we've got both measures of inflation in the target band at the same time. I was really pleased to see in the statement released by the Reserve Bank the three main points that the Monetary Policy Board has made. First of all, inflation has fallen substantially since its peak, and the upside risks to inflation have diminished. Secondly, it does recognise, I think in ways that the government recognises, that global uncertainty has increased in recent times. It also points out, though, that household incomes have picked up in our economy as well, and that's a good thing too. Look, today's interest rate cut doesn't mean that the job is finished when it comes to the cost of living, but it will help millions of Australians with a mortgage. And it's worth remembering that 3 years ago this week, this government came to office. When we came to office, inflation and interest rates were both going up, and now both are going down, and that's a good thing. Now, to give you a sense of the benefits, the average benefits for Australians with a mortgage, this decision today for a $500,000 mortgage means $79 a month, or $947 a year. For someone with a $750,000 mortgage, $118 a month, or $1,420 a year. Now remember, this is the second interest rate cut in 3 months. So the benefit that people will get from today's interest rate decision is twice that when you combine the February decision and now the May decision as well. This decision does reflect the substantial progress we've made on inflation, but also that we haven't had to pay for that progress with substantially higher unemployment or a substantially slower economy. And that makes us unusual around the world, that we've been able to get inflation down, we've got real wages growing again and incomes, we've got the debt down, interest rates are falling, growth is recovering in our economy, unemployment is low. All of that is happening at the same time, and those are all very welcome developments. Now, what makes the soft landing in our economy especially important is because of this increased global economic uncertainty that we're seeing, not just out of DC, but out of China, indeed right around the world. A lot of global economic uncertainty. And Australia is better placed and better prepared than most to deal with that uncertainty. Today's interest rate cut reflects that, but so does the progress we've made on inflation, real wages and growth and unemployment, and in the budget as well. So this is a very welcome decision. We are very, very pleased to see that millions of Australians with a mortgage will get a little bit of extra help as a consequence of this decision. We know that the job's not finished. We know that there's more work to do, but this is a very good development and we welcome it enthusiastically. Happy to take some questions. Hi.
Treasurer, just on energy rebates, welfare groups and economists have called for the rebates to come to an end at the end of the year when they're due to expire. Will you rule out doing so?
Well, what we've made clear over the course of recent months, certainly since in the recent weeks since the budget, is that this energy bill relief is an important way that we are helping Australians with the cost of living. We only extended it for 6 months rather than 12 months because we know that at some point this electricity bill relief will taper away and will have to end. We've made that clear publicly on a number of occasions. The point that I made on Friday, which I think is what you're referring to and that Strange Story today was referring to, is that when I was asked on Friday about cost of living help, in this case energy bill rebates, I made the point that I make before and after every single budget we've handed down, which is we evaluate the economic conditions, we evaluate the budget constraints and the pressures that people are under, and we do what we can to help. The final point I'd make about that is I thought it was very unusual in a story which was about energy bill rebates compared with ongoing help with energy efficiency or renewable energy, not to mention the hundreds of millions of dollars, extra dollars, that we're investing when it comes to renewables for social housing in particular. We announced that towards the end of last year. It's a very substantial investment. And what it shows is that we've been able to find room in our budget to help people with bills at the same time as we help people grasp the opportunities of renewable energy, including when it comes to people in social housing. We'll go behind you and then...
Sorry, Treasurer, will you rule out continuing them at the end of the year?
I think I've given a really comprehensive answer, and in the second part of my three-part answer, I pointed out that I say before every budget and after every budget that we evaluate the conditions and the constraints and the pressures that people are under. We've budgeted for it to end at the end of this year. That's clear in the budget papers. But what we do each budget in this room next door is we sit down with the Expenditure Review Committee and we work out whether we can afford to provide more assistance, and if so, what form that assistance would take. That will be our approach in future budgets, just like it was in the first four. It's currently budgeted to end at the end of this calendar year. We'll go behind you and then Andrew.
You've mentioned many times before that the RBA is an independent body, that the government doesn't have a direct role to play with it. But we've seen the last rate decision was a pause while the election campaign is going on. Parliament hasn't sit yet for this one. Parliament likely won't sit before the next one. And it's probably the most stable we'll ever see government decisions. What role does that have in what the RBA does? Do you think that this rate cut move is because there is this kind of stability in what the government's doing?
Oh, I don't see today's decision in political terms. I see it in economic terms. It is the right decision made for the right reasons. And the right reasons to make an interest rate cut like we're seeing today is the fact that together as Australians we've made a heap of progress on inflation. The global environment is uncertain, and for reasons outlined in the Independent Reserve Bank's statement today, they felt the conditions warranted this cut. The other thing which is a very good development is the Governor herself will be up shortly and will be able to speak through the rationale and the reasons for the decision that they've taken today. Politics do not play a role in decisions taken independently by the Reserve Bank. They weigh up the economic conditions, as they have in this case, and they have the opportunity to talk through their reasons. Andrew.
Thanks, Treasurer. On super, one of the things the Greens want in return for the support of the Division 296 legislation in the Senate is for limited recourse borrowing arrangements to be banned. That was actually Labor policy up until the 2019 election because of concerns it was overheating the property market. What's the government's current thinking on that? Do you support, is there room to maybe support banning those LRBAs by SMSF, self-managed super funds, as part of your negotiations with the Greens?
Oh, that's not something that we've been considering. And I think the point that we've made on a number of occasions since the election, the Parliament will return at some point. It won't be in the next few weeks. No doubt there'll be discussions in the Senate about the superannuation changes, but those discussions haven't begun.
Are you open to it though? Going back to your pre-2019 policy?
Well, first of all, that's 3 elections ago now. And so it's not our intention to resurrect all of the policies from 3 elections ago. We took an agenda to the election, including the changes to superannuation tax concessions to make very generous concessions slightly less generous, but still generous. And we would like to see that legislated in the Senate. We've not had any discussions about any of the changes that the other parties would like to see in the Senate. We'll go here and behind you, and then we'll come back to Tom.
The Reserve Bank Board said headline inflation is likely to rise at the end of the year as things like the energy rebate rolls off. Should households be worried when they see those numbers tick up again? Does it mean that future rate cuts won't be on the table towards the end of the year? Well,
I mean, first of all, we should acknowledge that the Reserve Bank has substantially revised down their expectations for inflation. So headline inflation by the middle of this year, in February they thought it would be 2.4, now they think 2.1. The end of the year, and this is partly because of the energy rebates, they've wound it down from 3.7 to 3.0. Trimmed mean underlying inflation, they've revised down for every half over the next 3 or 4 halves. So in the statement on monetary policy that the Reserve Bank's releasing today, they're downgrading, they're lowering their expectations for inflation, and that's a good thing. And they treat the unwinding of those energy rebates in the same way that the Treasury does with their forecasts. It's been clear for some time that when they are unwound, that has a short-term implication for the headline rate. But we are really encouraged and really pleased to see the Reserve Bank reflect in their statement that the upside risks to inflation are diminished, that we have made a lot of progress together on inflation. I think that's reflected in the fact that they have taken their forecast for inflation, both headline and underlying, down. Yep.
Sorry, Treasurer.
Hey, I did say you, yeah.
Can I please get your take on the coalition split today?
Well, this is a nuclear meltdown, and the coalition now is nothing more than a smoking ruin. They are hopelessly divided on personalities and on policy. It shows that the new leadership has failed its first test. It shows that they've learned absolutely nothing from the last few weeks or indeed the last few years. This is a nuclear meltdown in the coalition, and it's hard to see how Australians can take them seriously when they don't even take each other seriously. So the coalition is now little more than a smoking ruin. I think that is really clear. Also clear is the contrast between a government getting on with the job, managing the economy responsibly, here to talk with you today about the second interest rate cut in 3 months, and a coalition or a former coalition completely and entirely focused on themselves. They tried to divide the Australian community in the election campaign. They ended up dividing themselves. And the consequence of that is that the Liberal Party is now barely bigger than the crossbench in the Parliament.
Okay, right.
We'll post the water, so we'll go you three and then back here and then we're done.
Yep. Treasurer, this is the first interest rate.
Sorry, we're chuckling because I meant behind you and then we'll come to you. But if Tom's all right, we'll start here. No, please, mate. Please, mate. I wanted to explain why Tom and I were smiling.
Go ahead. Yeah. No, this is the first interest rate cut basically since Donald Trump imposed his tariffs, and the RBA in its decision was mentioning all the uncertainty internationally and how that affects on the domestic front, given that a lot of economists are saying that we're expecting 4, potentially 5 interest rate cuts this year. How do you see that those developments overseas will affect any possible cuts in the future? And also just on the Nationals issue as well, does that make governing even easier for you, given that the opposition is now effectively halved?
Oh, first of all, I mean, there's nothing easy about governing, and you know, we don't underestimate our political opponents even at their worst, and so I think it's self-evident today that they've torn themselves apart, but our focus is not on our opposition. Our focus is on our economy.
This is where we farewell ABC TV viewers in WA. You can continue watching The Treasurer on the News Channel. Bye for now.
Contrast laid out pretty clearly today. You know, our focus will continue to be on providing the responsible economic management, which has been a defining feature of this Albanese Labor government. It was the primary focus in our first term and during the campaign, and it will be a primary focus in our second term as well. And one of the reasons for that goes to the first part of your question. There is a lot of unpredictability and volatility and uncertainty in the global economy. We see that reflected in the Reserve Bank's statement. We see that reflected in the statement on monetary policy and in the way that they've changed the forecasts. Global economic uncertainty is casting a dark shadow over the whole global economy. And we are not immune from that. We're better placed, we're better prepared, but we're not immune from those developments. And you can see that in the way that the Reserve Bank has grappled with and explained this decision today, and no doubt Governor Bullock will also be asked about that shortly.
You suggested during the campaign, citing market expectations, there could be as many as 4 rate cuts this year. We've got 2 done now. Is that still your view? Do you think this could be the last cut for a while?
Well, I think, as you would appreciate, you know, I'm given lots of opportunities to make predictions on future movements on interest rates, and I don't take up that very kind offer of yours. The market has expected for some time that there would be multiple interest rate cuts this year. That is a matter for the Independent Reserve Bank, and it's a matter for the market and for the economists to make those sorts of assessments. There was an almost 100% expectation of a rate cut today, and that's what we saw. Obviously, the further out you go, the more uncertainty there is about that, partly because of the question before around the global environment. So that decision will be taken independently by the Reserve Bank. I won't predict or preempt those decisions that they take. The market expects there to be further interest rate cuts, but market expectations change over time. David.
Does this second rate cut give you more confidence that you can, as a government, help to put upward pressure on wages while delivering cost of living relief in a way that doesn't impact adversely on inflation? And just on the coalition split more broadly, nationally, I guess, does it concern you that we may be seeing a deeper divide between city and country coming out of this split?
I'll take that in reverse order again. The only party in the National Parliament capable of representing the cities and suburbs and regions and rural areas is the Labor Party. And that's clearer now today than it has been for some time. The splits in the former coalition are so deep and so personal that they can't be resolved. In the Labor Party, we've got representatives from right around Australia with different backgrounds. Our party room looks like Australia, and only Labor under Anthony Albanese has the capacity to bring people together and focus the country on our big economic and other challenges. The coalition has proven itself not just incapable of sticking together, but of providing that kind of representation in every corner of Australia, which the Prime Minister prides himself on providing. Now, when it comes to the various developments we've seen in the economy over the last few years, and indeed over the last couple of quarters, you know, we are especially proud that we have been able to get inflation down and see interest rates start to come down at the same time as real wages and nominal wages have been growing much quicker than they were under our predecessors. We've had really quite extraordinary employment growth, 1.1 million jobs created in the 3 years that we've been in office. We've got the debt down in the budget. All of this is happening at once. And what makes Australia unusual in the world is a lot of our peers have had to pay for that progress on inflation with much higher unemployment or with negative quarters of growth or recessions in some cases. New Zealand, the UK, I think the US is experiencing a negative quarter, or most recently predicted negative quarter. And so what that shows is that we've been able to do collectively as Australians, not just the government, the whole country, has done a good job of balancing those competing pressures. And so the soft landing that we've been aiming for and trying to engineer in our economy looks more and more likely now. And the decision today by the Independent Reserve Bank to cut interest rates gives us more encouragement that we can have low unemployment, we can have growing wages, we can have falling inflation, we can have interest rates being cut, we can have growth returning to our economy, private sector playing a bigger role in that. We're having all of those things at once. Other countries with which we compare ourselves have had to choose between one or other of those developments. Australia's seen all of that at once, and we're pleased to see some of that recognised in the statement and the decision today. Last two.
As noted in the statement today about that global uncertainty, you've spoken about the influence of the United States. The PM just had his first overseas trip. Would you like to see him go to the US, and was it disappointing that he didn't have a chance to meet Vance?
Well, the Prime Minister had a discussion with President Trump after the election result was known. He's had a number of conversations with President Trump in the last few months since President Trump was elected or re-elected at the end of last year. And so we engage wherever we can and whenever we can because this relationship is of mutual economic benefit. We've got a lot of skin in the game when it comes to these escalating trade tensions. And so a number of us in the government, including the Prime Minister, have engaged with our counterparts in the US, and we should expect that to continue. I'm not going to tell the Prime Minister how to arrange his travel schedule. He's had a number of important meetings in Indonesia and also in Rome, and that's appropriate. Now, because you've asked me about the US economy, and a number of you have shown an interest in the last day or two about the Moody's downgrade to the credit rating in the US. And that is another reminder, which goes a bit to David's question before, about how much better we are faring than other countries like the US. You know, our gross debt position is better than the US. Our budget balance is better than the US. We've got the AAA credit rating from all three of the agencies. The US have just been downgraded by Moody's. We've got lower unemployment here. We've got stronger employment growth here. And we've got lower interest rates here in Australia as well, at the same time as we've got similar levels of inflation. And so that comparison, I think, is another reminder that Australia is especially well placed and well prepared to deal with all this global uncertainty.
If I can just sneak another Vatican question in there. Don Farrell went over, he made a prayer when he was there for Anthony Albanese and the Labor Party. It's been quite the 2 weeks. I mean, how's the Labor Party feeling at the moment?
We're focused on the job at hand. And obviously we're very grateful for the opportunity the Australian people gave us. We're especially grateful for the magnitude of that victory. But we know that the Australian people didn't elect us to celebrate, they elected us to govern and to take seriously the challenges that we confront together, in my case, the challenges in the economy and in the budget. And that's what we're doing. You know, we're very pleased with the result, we're very grateful for the result, but we're not going to dwell on it because we've got work to do. Tom.
Party splits can be pretty consequential in political history. Do you see this as being a long-term realignment or a blip for the coalition? Obviously, it's probably politically good news for the government.
Well, I think it remains to be seen how long this lasts. It is a seismic event in our political history. I think that's really clear. And I think it shows that the most basic elementary test here has been failed. And fallen at the first hurdle. And so, as I said before, it is rare, but as I said before, it's consequential because the divisions in the coalition were unable to be reconciled. And I think it does show that the former coalition parties learned nothing from the election result. They've learned nothing from the last 3 years. They're focused inwardly on themselves while the Albanese government is focused on governing. So it's a nuclear meltdown. They are a smoking ruin. And I think developments today made that really clear. Thanks very much, everyone. Appreciate it.
Treasurer Jim Chalmers speaking in Canberra after the Reserve Bank has cut interest rates by 25 basis points to 3.85%.